Welcome to the Explainer. Today, we're grabbing our magnifying glasses and putting on our detective hats to investigate a really fascinating case.
So get this. Our subject is a stock, ticker AIRE. And even after a pretty big recent plunge, it is still up a staggering 168% from where it started back in July. This is kind of nuts. Okay, let's dive into this.
So here's the deal. We're not just going to read you a boring technical report. Nope, we're going to treat this like a real investigation. We're looking for clues to solve the mystery of this stock's absolutely wild behavior.
Okay, let's look at the case file. This thing has been on an absolute roller coaster. We're talking 2 huge rallies and 2 big drops, all in just a few months. That right there, that's our pattern of extreme volatility. I mean, going from just 31 cents all the way up to $1.80 and then back down, that's the heart of our mystery.
All right, every good investigation starts at the scene of the crime, right? Well, in our case, the scene is the price action and, maybe even more importantly, the volume.
And boom, here's our first major clue. Just look at that volume. We're talking enormous spikes during those rallies. On one day in July, nearly 800 million shares changed hands. What does that tell us? It tells us that huge crowds, speculators, jumped in on the action. And now? It's gone quiet. For now.
Yeah, after all that craziness, things have really settled down. The stock is just hanging out, trading in a super tight range. This is classic market indecision. It's like the calm before the next storm. But the big question is, which way is the wind going to blow next?
Okay, to figure out what's going on, we need to interview our witnesses. In the stock world, our witnesses are the technical indicators. But here's the problem. Their stories are all over the place. They just don't add up.
First up, let's talk to the moving averages. Think of these as a way to smooth out all the daily price noise to get a better sense of the stock's momentum, both recently and over the long haul.
And this is where things get really interesting. It's like a tale of 2 different timelines. The short-term evidence, like the 5-day average, it's acting like a ceiling, pushing the price down. But the long-term evidence, the 50-day average, that's way down below, acting like a solid floor. It is a total tug-of-war between the bears and the bulls. So, the moving averages are giving us mixed signals. Let's bring in some more experts, some other indicators to see if we can break this tie. We're going to look at things that measure momentum, the strength of the trend, and whether the money is flowing in or out. And, well, it looks like our witnesses just can't agree. It's a total mess. You've got one indicator, the MACD, screaming that momentum is negative. That's bearish. But then you look at another, the ADX, which measures how strong the trend is, and it's at a super high value, telling us the trend is powerful. It's crazy. For pretty much every bearish clue we find, there's a bullish one right there to contradict it. Okay, with all this conflicting day-to-day noise, it's easy to get lost. So we need to step back, we need to zoom out, and build a sort of psychological profile of this stock. And to do that, we're going to use a really cool tool called linear regression. So what is that? Basically, it's a fancy way of telling us to ignore all the short-term drama, the crazy daily swings, and just find the underlying trend line. It helps us see the stock's true personality over the whole 3 months, underneath all that erratic behavior. And check this out. The profile is super revealing. That positive slope, it confirms that even with all the chaos, the stock's basic personality is to, well, move up. Now, that R-squared number tells us that while the upward trend is real, it's been a seriously bumpy ride. And where is it right now? Just a little bit below where that long-term trend line says it should be. And this quote from the analysis really nails it. It basically confirms our profile. After looking at all the long-term evidence, the conclusion is that the path of least resistance is still up. The stock's fundamental character appears to be bullish. All right, we've interviewed the witnesses, we've profiled our subject. It is time for the final verdict. Let's weigh all the evidence and lay out what could happen next. So these are the numbers you gotta watch. These are the critical battle lines. Think of the support levels as floors holding the price up, and the resistance levels as ceilings pushing it down. The whole fight between the bulls and the bears is gonna be won or lost right here, at these key levels. So when you put it all together, there are really 3 ways this could play out. Scenario 1, the bullish breakout. If it can punch through that 87-cent ceiling, we could see the rally fire back up. Scenario 2, the bears take over. If it breaks down below that 80-cent floor, we could see it drop even further.
And then there's scenario 3, it just keeps going sideways, stuck in this range while the market tries to make up its mind.
So what's our final assessment? Our investigation shows that the story of AIR is all about conflict. You've got this short-term weakness and bearish pressure fighting against a much stronger underlying bullish trend. And the whole thing is wrapped in a thick blanket of extreme volatility and risk. It's a real nail-biter.
And that leaves us with one final big question. You've seen the evidence. This whole story is about conflict. So the question for you is, do you trust the short-term jitters, or do you bet on the long-term trend? The clues are all on the table, but how you put them together, well, that's the final piece of the puzzle.